Hello friends, in this lecture we are discussing banking laws and practices. And the first topic is Reserve Bank of India, RBI. RBI was established on April 1, 1935 under RBI Act 1934 on the recommendation of John Hilton Young Commission 1926 called the Royal Commission on Indian Currency and Finance, is the central bank of the country and was nationalized with effect from January 1, 1949. Prior to its existence, Imperial Bank of India, which is now SBI, was conducting the central bank's functions. Originally, it was a shareholders' bank, which was taken over by the central government under Reserve Bank Transfer of Public Ownership Act 1948, paid up to capital rupees 5 crore. RBI's central office is in Mumbai. Now, management of RBI. RBI is managed by a central board of directors with 4 local boards at Mumbai, Delhi, Calcutta and Chennai. Calcutta is known as Kolkata. It has 1 governor, provision for 4 deputy governors and 15 other directors. Now, what is the functions of RBI? A. Issuance of currency. Under Section 22 of RBI Act 1934, RBI is the authority in India to issue currency notes called bank notes under signature of governor. Now, 1 rupee note called currency note is issued by the central government and signed by finance secretary. Now, this is different from other notes. Issue department is responsible for issue of fresh notes against security, which consists of gold, coins, bullion, rupee coins, foreign securities, eligible promissory notes and other approved securities. Aggregate value of gold and foreign exchange reserves should not be less than rupees 200 crores, out of which gold, coins and bullions should not be less than rupees 115 crores. Section 33 says this. The stock of currency is distributed by the help of currency chests spread all over the country. B. Banker to government. Under Section 20 for central government and under Section 21A for state government, RBI transacts government business and manages public debt. SBI or any other bank is appointed agent where RBI does not have office. It provides ways and means advances to government. Section 17/5. C. Bankers Bank. It keeps a part of deposits of commercial banks as CRR and acts as a lender of last resort by providing financial assistance to banks. Section 17(2) and 17(3) enable banks to approach RBI for rediscounting of bills, refinance, etc. It provides export credit refinance, liquidity adjustment facility and marginal standing facility. D. Controller of banks. An entity which is to conduct banking business in India has to obtain license from RBI. RBI acts as controller of banks by including the banks in second schedule of the Act. It reserves and issues directions, carries inspection on-site as well as off-site, and exercises management control. Now, controller of credit, that's E. Controller of credit. Under Section 21 and Section 35A of Banking Regulation Act, RBI can fix interest rates, including bank rates, and exercise selective credit controls. Various tools such as change in cash reserve ratio, stipulation of margin on securities, directed credit guidelines, etc. are used for this purpose. It also carries sales and purchase of security, which are known as open market operations. F. Statutory reserves. RBI ensures that the banks maintain certain percentage of their assets in liquid, that's cash form under SLR/CRR rules. G. Collection of information. RBI collects credit information under Section 45C, information on borrowers enjoying credit limit up to rupees 10 lakhs on secured basis and rupees 5 lakhs on unsecured basis. These limits have been changed with time, and can share this information with other banks under Section 45D. Besides, RBI obtains information on suit filed accounts and BSR returns. H. Maintenance of external value. RBI is responsible also for maintaining external value of Indian currency as well as the internal value. Foreign exchange reserves are held by RBI, and it has wide powers to regulate foreign exchange transactions under FEMA Act, that is Foreign Exchange Management Act. So, comprising the functions of RBI are comprising of A. Issuance of currency, B. Banker to government, C. Bankers bank, D. Controller of banks, E. Controller of credit, F. Statutory reserves, G. Collection of information, F. Maintenance of external values. Financial Conglomerate Monitoring Division. Financial Conglomerate Monitoring Division. Board of Banking Supervision came into existence under RBI's BFS Regulations 1994 under Section 58 of RBI Act with effect from November 16, 1994, with RBI Governor being its ex officio chairman. Its functions include impanelment and selection of statutory auditors for banks and exercise integrated supervision over commercial banks, FIs and NBFCs and other para-banking financial institutions also. The supervision is both the on-site through inspection and off-site through DSB returns. DSB returns are introduced with effect from April 01, 1996. With effect from 1st April 2011, it has been recognized as Financial Conglomerate Monitoring Division of RBI. Now, RBI Act 1934, under which Reserve Bank of India is being instituted. What are the important provisions? Section 2E. Scheduled bank means a bank whose name is included in the second schedule of RBI Act 1934. For more details, you can see further. Section 17 defines various types of business which RBI may transact, which includes acceptance of deposit without interest from central and state government, any other person / institution, purchase / sell, foreign exchange, securities, discount the bills / promissory notes, grant loans, etc. This comes under Section 17. Now, what is Section 18? RBI provides emergency loans to banks on liberal terms. Section 18 says RBI provides emergency loans to banks on liberal terms. Section 19. It describes business which RBI may not transact. Under Section 19, the business parameters which RBI may not transact are being described. Section 20. Banker to government. It performs various functions of the government. For the government, it transacts government business and manages public debt of the central government. Section 21. RBI has the right to transact government business in India, that is remittance, exchange, keeping deposit free of interest, etc. Section 22. Sole right to issue banknotes. Now this is important. Section 22 of RBI Act 1934 says RBI has the sole right to issue banknotes in India. Section 23. Banknotes shall be issued by Issue Department. Section 24. Denomination of notes, that's 2, 5, 10, 20, 50, 100, 500, 1000, 2000, 5000, 10,000, whatever the decisions of government and the governor of RBI. This keeps changing as per the environment. For example, after 2016, central government may direct discontinuance or non-issue of banknotes of any denomination, which already keep changing from time to time. Section 26. Banknotes issued by RBI shall be legal tender and shall be guaranteed by central government. What Section 26 says? Banknotes issued by RBI shall be legal tender and shall be guaranteed by central government. Section 28. RBI can frame rules for refunding value of mutilated, soiled or imperfect notes as a matter of grace. Rupee coins and 1 rupee note shall not be a currency note for any purpose of this Act. Section 29. Now we are reading different sections of RBI Act 1934. So Section 29. Bank note shall be exempted from stamp duty under Indian Stamp Act. Section 31. This section prohibits issue of note payable to bearer. No person in India other than RBI or central government shall draw, accept, make or issue any bill of exchange, hundi or promissory note for the payment of money payable to bearer on demand. Section 33. Assets of Issue Department of RBI shall consist of gold coins, gold bullion and foreign securities not at any time less than rupees 200 crores, for which gold coin and gold bullion not less than rupees 115 crores. Section 42. Cash reserve ratio (CRR) of scheduled banks to be kept with RBI as a daily balance. Section 42C empowers RBI to add or delete the name of any bank in second schedule of RBI Act 1934. This right reserves with RBI. Section 42C. Section 43. RBI to publish every fortnight a statement showing aggregate liability oblique asset of all SCBs, scheduled commercial banks. Section 45A to F. These sections empowers RBI to collect credit information. Section 45C returns as on last Friday of April and October every year, giving information on borrower enjoying secured credit limits of rupees 10 lakhs and above and unsecured limits of rupees 5 lakhs and above. RBI also collects details half yearly, March and September, of all doubtful, loss and suit filed accounts with aggregate outstanding of rupees 100 lakhs and above, and circulates the information amongst banks and financial institutions. Besides, banks submit basic statistical returns, that is BSR1, details regarding borrower according accounts of rupees 2 lakhs, and BSR2, information about deposits with breakup in current, saving and term deposits. Now section 45H to 45T. These section regulations relating to non-bank finance company NBFC. Section 45S puts banks on acceptance of deposits from public by individuals or any unincorporated body as per an amendment in 1997. Section 48. Exemption to RBI from paying income tax. Section 48 of RBI Act 1934 explains exemptions of RBI from paying income tax. And Section 49, announce public bank rate. Bank rate as per this section is the standard rate at which RBI is prepared to buy or rediscount bills of exchange or other commercial papers eligible for purchase under this act. So here we have enumerated various sections of RBI Act 1934 which are useful for your exams, for banking information and other purpose of education. Thank you for having listened this lecture.